Hello everyone, it's Arnaud Delapierre. Today we're going to talk about risk management in trading, a topic that can really make the difference between calmly moving towards your goals or losing everything in an instant. Here we'll go in a simple, direct style full of concrete examples. I will share with you some thoughts from my experience to avoid the major pitfalls that await in this field. So get comfortable, be ready to take some notes because this episode will give you a solid foundation to protect your capital and move forward with confidence. Let's go, we begins. When we get into the stock market, or why not the crypto market, the temptation is strong to want big gains right away. It may seem exciting, but know that without a solid framework, capital protection, the fall can be harsh. Risk management is what will allow you to survive the storms and continue trading for as long as possible. And believe me, there are storms. In this video, we will focus on concrete concepts: position size, diversification, and the importance of going step by step. Stay with me. We won't stop at the superficial. Before addressing the concrete methods, it's important to understand the mindset that accompanies it, particularly that of a good trader. We don't just want to chase quick profits. We're looking for a measured approach with clear objectives and a serious commitment to protect our account. If you do not take the time to define your risk tolerance, you are likely to spend your time stressing and making hasty decisions. The best traders are often those who know how to lose gracefully and learn from their failures. They know that a wise stop loss can save the game in the long run. Just before we dive deeper, I would like to tell you about an app that I really appreciate. It's called Notrade, available for free. Is free on iOS and Android, and it's a powerful tool for those interested in stock and crypto trading signals. It gives you clear alerts and allows you to track your favorite pairs and quickly identify opportunities that match your strategies. For both beginner and experienced traders, it's a real daily support. It's completely free, so don't hesitate to take a look if you're looking to better understand your positions. Let's get back to the topic. The first concrete step to properly manage your risks is to limit, consequently, the size of your positions. Too often, we want to bet big to make a great score, but it's an open door to overloading. A basic rule is to never risk more than a small percentage of the capital. Sometimes they say 1 to 2%. This will prevent you from going broke if the market doesn't go your way. Adjust this percentage according to your trader profile, but remain cautious. Managing your stake is a bit like putting on your seatbelt before speeding on the road. The stop loss, it's an automatic exit order that allows you to limit your losses if the price goes against you. Too many novice traders make the mistake of doing without it because they think the market will eventually rebound. However, one can never predict the movement of an asset for sure, never. If you set a reasonable stop loss, you exit the position before losses become insurmountable. It's not about cutting your trades too soon, but about preserving your account. It's a logical continuation of mastering position size. Diversification, finally, is a concept I often like to remind you of. Putting all one's eggs in the same basket, whether it's a single stock or a single cryptocurrency, is like betting everything on one horse. To limit the damage, it's better to spread your capital across different opportunities so as not to be dependent on a single sector. This protects you against, on one hand, sudden fluctuations. And of course, nothing guarantees a perfect portfolio. The ideal is simply not to play Russian roulette. You can choose several asset classes and thus smooth out risks while taking advantage of opportunities. Then we often talk about the ratio risk debt risk return. The idea is as follows. Before taking a trade, make sure the potential gain is worth the risk. For example, if you risk 50 euros, try to aim for a profit of at least 100 or 150 to create a favorable balance. This allows you to accept a few losing trades without your account suffering too much. As long as your gains compensate, the trades that succeed over time are often those that ensure their winning trades more than cover their losses by adjusting the ratio consistently. Psychology should not be overlooked either. Stress, fear, euphoria can make you forget more basic rules. Sometimes you will want to make up for a loss by doubling your position. Other times, you will let a winning trade run without securing anything because you hope to keep climbing. These are classic mistakes that stem from a shaky mindset. Strong traders discipline themselves to follow a plan and thus remain calm during critical moments. A good mindset is often built through discipline and progressive learning. Losing streaks can happen even if you are experienced. I have also experienced this not very long ago, for a long time. It is in those moments that you have to keep your cool, reduce the size of your positions, take a break if necessary, and above all, calmly analyze what happened. Sometimes you think the market is volatile and it's simply temporary. In other cases, the method needs revising. Avoid rushing in headfirst to recover immediately. The goal is to stay present for the long term. Take the time to question yourself, but don't throw everything out the window at the slightest hiccup. Whether you're trading Forex, cryptos, or stocks, the basic technique remains the same. Protect your capital first. This is rule number one. Some markets may be more volatile than others, but the general principle doesn't change. Set your stops, choose reasonable volumes, and always keep an eye on the key indicators. Don't fall into the trap of excessive leverage either. It may seem enticing, but if the market turns, it's a cold shower. Risk management is not the most exciting part, I must admit, but it's often the one that saves your account. In large financial firms, we often talk about having a contingency plan. Even if we are not talking about gigantic amounts, the logic remains valid for an individual trader. It's about defining what to do in case the market stagnates. If there is a sudden reversal, keep in mind that trading is never a linear path. Sometimes you can have great successes and the next moment suffer a big loss. Managing this kind of situation involves preparation beforehand, a clear plan, and especially the mental strength to stick to it. Consistent risk management also rhymes with realistic expectations. Promises of quick and huge gains often dangle a fantasy. In real life, trading requires patience, analysis, and a tolerance for uncertainty. By aiming for overly high goals and taking excessively large positions, one ends up getting burned. On the contrary, aiming for gradual growth with careful monitoring, performance, as we hear, allows us to consolidate a good habit and limit damage. It's a marathon, not a sprint, and every trade must be handled with care. To put into practice everything we've seen, you can adopt a simple yet effective routine. Every morning, check your open positions, adjust your stops if the market shifts, and make sure to stay aligned with your management rules. Before taking a new position, identify your maximum risk, your exit threshold, and your target level. Note your thoughts carefully. It will help you stay consistent. At the end of the day or week, do a brief review to see if you followed your own guidelines. This consistency will protect you against impulsive mistakes. We're coming to the end of this discussion, and I hope you found ways to solidify your trading practice. Risk management is often neglected by those who start and find it so boring, but it's so important. That's what makes the difference in the long term. If there's one thing to take away today, it's that your profits are protected upfront, thanks to a measured outlook and well-established rules. Thank you for being here. I really appreciate your support. Remember to subscribe to the channel and like the video if you enjoyed the content. I was Arnaud Delapierre, and I'll see you very soon.